On today's Hot Sheet, I'm discussing the biggest buyer discount in 13 years, a surge in relistings after the surge of delistings, and net migration and population growth data for 25. We got more migration data in. Today is Tuesday, February 3, 2026. I'm Byron Lacine, and the Hot Sheet starts now. Live from Naples. Pleasure to be with you wherever you may be tuning in from, however you may be listening. It's always a pleasure to be with you here every Monday through Friday when markets are open. It's the only live 24-hour look back on the housing market for real estate professionals across our industry. We're the only ones that do it, and open source for everybody. If you're listening on YouTube, share this with somebody you care about. Share this with a agent you want to see win. Welcome back to those who I saw in the role play mastermind over in BAMX. I see the Sacramento realtor. Is that Jason? Is that Jason Flory? It looks like Jason on the. I don't know. There we go. I think that is Jason. I see Fidel back in. So Sam on the role play mastermind. You can get into the role play masterminds every single Tuesday before the Hot Sheet. Go to school.com/BAMX. We got Patriots fans in here. Oh boy. All right. We're not going to get into that. All right. Big home buyer discounts. Okay. So what are we seeing right now? According to this report out of Redfin, we're not only seeing buyer discounts, but we're seeing the biggest discounts in 13 years. Wait a minute. I thought it was impossible to negotiate on homes. I thought sellers were bad, ripping off buyers. I thought affordability was so severely moved in one direction that it would never, ever come back as long as we live. That despite the fact with medicine and health advances and, people out there saying, hey, I've come up with a way to never die and we're going to live till 200, that we'd never be able to own a home. Yet, I don't know, the last 13 years now, we're seeing the biggest buyer discounts. Does that mean there's momentum in the other direction? Okay, let's take a look. Typical home buyer right now, this is 2025 data, purchased a home for 7.9% below the list price. This is the largest since 2012. I remember 2012. 2012, in my market anyways, was the worst market ever. Okay? I know there's a couple of years here in the past 24, 36 months that can compete on some people's lists, but 2012 was the double bottom of the real estate market after the GFC. I know for some it might have been 10 or 11 in your market, but 2012 was it for me. And this is the biggest discount nationally since 2012. Okay, wow. That's a huge number, 7.9%. Meaning smart buyers right now are not waiting for a 30, 40, 50% correction that likely isn't coming on a national basis. We've seen pockets north of where I'm sitting today that have seen 30, 40% price adjustments that overheated up 80, 90%, over the last 5-6 years. But on the whole, we're not waiting for 30, 40% price drops over the next 12, 24 months because it doesn't work that way. Go back in history. You don't see drops like that. Okay. Nominal home prices have only dropped 4 years, 2007 to 11, over the last 80 plus years. Okay. Prices on real estate typically do not move down. Okay. So yet that being said, buyers right now are getting these discounts. So the smart buyers aren't waiting for a global meltdown, which would, by the way, impact their ability to buy in that scenario anyways. If you have a global meltdown, go back to 2009, 10, and 11 when we had a global meltdown. Even the people that could buy didn't want to buy. Their portfolios, their in retirements were down so much, they were scared to make a move. I mean, a couple of really smart investors cleaned up, but on the whole, people were stuck. Transactions, I know we think transactions are low right now. They were basically the same then. Okay, very similar to the last 3 years on transaction count. Okay. In dollar terms, the typical home buyer who paid less than the list price in 25 got a $31,000 discount. And so they calculated by applying the 7.9% average discount to last year's median original list price of $399, and among all home buyers, the average discount was 15 among all home buyers. The average discount was 15,000 plus, which is 4%. Okay. 3.8%, the highest number going back to, say, 2013, 2014 timeframe, 2014, 2015 timeframe. Nearly 2/3, 62% of home buyers in 25 paid less than the list price. Okay. If I'm sitting down with a seller and I'm walking through, okay, what's the price? Well, there's only 3 ways to price a home. If you're not having that conversation with every seller in 2026, send somebody else to the listing appointment on your behalf that'll have that conversation. It's a no-brainer conversation. People who have had it, it's worked for 50 years. BAM board member Sharon wordsmith the heck out of it for us. So it sounds creative so that it doesn't smack somebody in the face when you call overpriced listings aspirational listings. There's only 3 ways to price a home: aspirational, perceived value, comp-based, or event-based. Only 3 ways. And that introduction price is an invitation. It's not a sale. Because you post something, if I post some kind of widget on Amazon, the posted price is the sales price. I mean, $9.99. What is somebody going to bargain over a nickel? It's not how real estate works. Fine art doesn't work that way. Fine art goes up. There's an auction pushing price up. Assets, okay, it doesn't work that way. So when we post a price online, it's the invitation for interest to accumulate enough conversations that lead to home tours, that lead to showing time lighting up, that lead to lines in open houses, to create enough demand where that demand surfaces up into offer or offers, where we can now present a case to a seller that suggests, hey, we have leverage that we can lean on to get what we want, or we're getting exactly what we want with the right terms. Let's move forward. Okay. 62% of home buyers, this is the important part for the seller to understand, over the past 12 months have negotiated that invitational price. Now, the invitational price was attractive enough to start the negotiation. What do home buyers want right now? Well, the market's overpriced. Now, that's what they hear from everybody. Everything costs too much. Oh, I got a deal. 4% off $500,000. What is it? It's $20,000. Okay. Man, I paid $480. 490 feels better than 502. And I paid $4 blank from a buyer mentality, from a buyer perspective, sharing the information with friends and family. I paid, it doesn't matter what the number is afterwards. I paid this for blank blank versus even on the nose. This, by the way, sounds better than this. It's $1,000. It's pennies on a 30-year mortgage, but this one sounds so much better. The $499 even versus the $500, and obviously $490, $480. I feel like I negotiated a win. Okay, a lot of it's confidence and feeling. Is your home, Mr. Seller, going to be the one that attracts the buyer because we've made them feel good about the deal, confident enough to move forward all the way to the closing table? 62% of home buyers scored a discount. Home buyers know what's going on in the market. They know the market very well when they're in the heat of search. 60, 90 days. They know what's going on. Oftentimes better than local agents. Not suggesting that as a practice to local agents, just calling it what it is. 62% of buyers getting this discount, they felt good about it. So we should be ready, willing, able to, in certain markets, guys, know your market, know the price points, of course, but to stack value off of our introduction invitation list price. Stack value, as Ivy Zellman has said oftentimes, do what builders do. Stack incentives into the price. Oh, I'm getting more. Or discount the price in some fashion. Oh, I'm getting more. Okay, that's how we decrease DOM. That's how we lock in solid buyers. Having that conversation up front. 3 ways to price a home. These are invitational prices. Here's how the negotiation is going to look. Here's what we should be willing to do 62% of the time. Okay, if we want to increase our ability to get sold. Okay, now that being said, if you lean closer to perceived value or event-based value, you still have a chance to sell at list or above list. Okay, above list still happened 22.8% of the time over the last 12 months. 1 out of 4 home could figure it out. 1 out of 4 agents and sellers could figure out the strategy that works. Do we want to be one of them? I've given you the 3 strategies. Which one are you leaning towards? What's your comfort level? Which one feels less risky? Okay, a lot of the questions I'm throwing out here, guys, we work through the proper frameworks on these in the role play masterminds on Tuesdays. Go to school.com/BAMX to be on those member only calls. Sold at list 15.6%. Okay, so this is just a framework. Using these stats, very easy to build into the framework that already exists. Every agent should be walking through the 3 ways to price a home. It's common sense. If you're not doing it, you're setting yourself up for failure 30, 60 days down the road. Average discounts of homes sold below original list price. It's increasing over the last 24 months. Average discount of all homes sold increasing over the last 24 months. Share of homes sold below original list price increasing over the last 24. Share of homes sold above original list price decreasing. Share of homes sold at original list price decreasing. Original list price increasing. By the way, if you were selling 24 months ago, our invitation price would be lower than it is today. So good news is we're building the discount in. Okay. If we went out 18 months ago, you'd be at a lower number. So the discount's built in. $399 versus $415. Let's roll. 1 in 4 buyers who score discounts get at least 10% off. What's the discount going to look like? Well, 25% of the time it looks like this. But near 50% of the time, it's 0 to 5%. Okay. 28%, it's 5 to 10%. Okay. This is nationally. You might have numbers for this, obviously, in your MLS. Who's getting the biggest discounts? Well, condos. Things are expensive. HOA, insurance. Condos are getting the biggest discount. Condos, obviously, more inventory in certain markets as well, more competition. Condos at 8.1, single family at 7.9, as mentioned before. Townhomes at 6.5 on the discount. Home buyers in West Palm Beach are scoring the biggest discounts. Florida, parts of Texas are seeing the biggest discounts. As you go into some more of these competitive markets, when you're factoring supply and demand dynamics, those discounts get smaller. Okay. But obviously, the areas with the most inventory competition, those discounts are going to be larger, more opportunities there. If we look at specific markets, Austin, average discounts actually below the national average, 7.1%. Now, 82% sold below the original list price. If we filter for this, you've got your Newark, San Francisco, San Jose, Montgomery County, Pennsylvania, Milwaukee, Providence, Rhode Island, Virginia Beach, Nassau County, Boston, Baltimore, Oakland, New Brunswick, New Jersey, DC. These are all under 50% on the share of homes that sold below the original list price. If we go to the other extreme, West Palm, Fort Lauderdale, Miami, Austin, San Antonio, Dallas, Jacksonville, you get the picture. High inventory markets, they're all up at 80+% of homes are selling below original list price. If I'm in one of those markets, hey, there's an 80 to 90% chance we're selling below the invitational price. So now it's positioning with the right pricing strategy, knowing sales price is going to be 80% chance less. We want to be in that rarer air that goes list price or above. Then we got to create instant demand. We got to go with strategy number 3, event-based pricing. That's our only option to get into that rarefied air. Okay. Sellers always want the rarefied air, don't they? All right. Speaking of sellers, there's a whole bunch of them now coming back to the market. Okay. Lance, Bam friend, Knowledge Brokers podcast friend over at Resi put out a bit of information here that inventory boomerangs, okay, hit housing market as last year's 10-year high. Remember last year, huge delisting acceleration, meaning expired listings, canceled. I'm done. I'm withdrawing. I'm taking my home off the market. I'm delisting it either because the agent I hired failed, I was unrealistic, market failed me, don't want to sell anymore, not finding what I want on the other, whatever, right? Mismatch between expectations and market reality. I still call that an agent failure because you hired an agent and they kind of, let you have your way, Mr. Seller, Mrs. Seller. If you're on the market for 3 months and you're way up into an aspirational price, you're beyond there's an unethical price category. It's above aspirational range. Okay. And you didn't have the conversation with that seller. Well, it's like they're mad at the agent. They're mad at whatever the market. I'm also mad at the agent. They didn't have the conversation. Okay. So heading into this week, there was 76,000 plus relistings. So those homes who said, you know what, I'm done last year. I don't like what I'm seeing. I'm backing off. Okay. I don't feel good about it. It's like somebody's first time doing a cold plunge. They put their toe in the water. Nope, not for me. Okay. They back off. I don't feel good about it. I'm out on this deal. I'll leave this to somebody else. I'll leave it to the real health nuts out there. Okay. They were on the market, tested the temperature, hated it, hated their rate, whatever, came off. Well, now they're coming back. 76,000 plus are back on the market. Okay. Here's the share of active single-family housing inventory for sale that are relisted properties, over 11%. Over 11% of today's inventory has been on the market before. They're not first-timers, okay? This isn't their first kiss. They're on second base. Last year, it was 10%, so that's moved up. Okay, here's the stat that I think is interesting. You've got the 76,000 relistings. Last year, in the same week, it was closer to 60,000. In every single week to start January, we now have a significant trend line forming. This is according to Compass chief economist Mike Simonson. He's the founder of Altos Research, by the way. He's been doing this a long time. He breaks up data very creatively. Okay. And, this is something to consider. Okay. What should I be? We talk about this on Role Play Mastermind. We're working through it a little bit today. What should I be focusing on over the next 60 to 90 days? Where are the opportunities in the market? Well, the last 4 weeks show us there is a huge trend in relistings. 4 weeks in a row is a trend. 4 weeks in a row tells me this is going to continue throughout the next 60, 90 days. This is going to be a springtime trend. So there are hand raisers in your market that have told you, I'm ready to roll. You just need to be creative in your offer. You need to be creative in your hook. You need to have your scripting down and just reach out. It's really that simple. So delistings are actually falling as a share of total inventory, which is the opposite effect of what we saw last year. Okay. So agents pay attention because this is a trend. This is opportunity. Buyers on the flip should be paying attention. I mean, look what Lance says here. Why should buyers pay attention? Hey, opportunities. A relisted home signals the property was previously marketed. Failed. I love using that language as well, Lance. If I'm talking to a seller, hey, your last agent failed you. That hits. They failed to transact at the seller's desired price. Now they're returning. Maybe they're more realistic. Okay? Like, once you've got some experience, some bumps and bruises, were you better as an agent on day one or day 1500? You got a lot more bumps and bruises, experience, conversations, rejections. It takes multiple touches and conversations to get the yeses in these markets. You understand that on day 1500. You probably didn't understand it on day one. Okay? But these are opportunities. It's maybe an opportunity for an agent to deliver a hotline of relistings. Hey, this is the 11% of the inventory. I think we've got the most chance of getting a discount. What did we just talk about? Okay, the discounts are increasing, not decreasing. Relistings are increasing. Could this be the chance for the feel good scenario for buyers this year? I think it could. Okay, U.S. Census Bureau, quickly. We've been doing a lot of migration stuff. I know I did a long show yesterday, so I want to keep it short for you guys. We got BAM Pro Bowl tomorrow, bamprobowl.com, noon Eastern time, our first mega virtual event of the year. Go to bamprobowl.com and sign up when we're done if you haven't done so already. We got more migration patterns. The U.S. population growth slows due to a historic decline in net international migration. Okay, so obviously we know the story there. 2025 was all about closing the border. And so that plays into this. Population growth in the United States has slowed significantly with an increase of only 1.8 million. 0.5%. And that's between July 1st, 24 and July 1st, 25. If you had all of 25, probably would show even slower growth. You still had growth. Growth was slowing in the end of 24. Remember, leading into the election, both sides understood that was going to be a big voter topic, and voters were significantly leaning one way overall on that topic. And so they slowed down the migration at the end of 24 and then kind of slammed the door shut, obviously, in 25. But it's the slowest population growth since the early period of the COVID pandemic. Okay. And so the slowdown in U.S. population largely due to this decline in net international migration. Okay. So we've got this net migration population moving down. Okay. Now, what about the migration in these different states? Now, we looked at some of this yesterday. This is according to the Census Bureau, not the U-Haul stuff. And we'll take another look here. Population change. This is according to Realtor.com, breaking down that Census Bureau stuff. Population change now through domestic migration. Okay. Where are people here domestically moving the most? Okay. So just another way to look at some of the numbers we were looking at yesterday. New York, Hawaii, Alaska, California, biggest net outflows from movers on a percentage basis. Different way to look at the numbers on a percentage basis based on their current population versus how many left. New York's the closest to 1%. That's a big number for a big state like New York, 0.69%. So almost 0.75%. California up at almost 0.6%. Okay. Big population states. Florida moves up on the net, but it's increment. It's 0.1%. Okay. Texas has a real move up at 0.21%. Nevada almost 0.5% up. South Carolina by far, with Idaho as well, by far the leaders, up over 1% respectively. 1.21 in South Carolina. So Florida, Texas still growing as we talked about yesterday, but it's just slower right now. Okay. My domestic migration of Florida and Texas slows dramatically compared to previous growth numbers. I mean, Florida was off the charts in 21 and 22, now way down. Remember, 22,000 was the number we looked at yesterday versus like a year where they had over 300,000. Okay. So big population report here. Again, this is July 24 to July 25. I don't love that. It's just the way the Census Bureau does it. It feels a little bit unclean. But what they're reporting here on the overall analysis is the Midwest population is growing again. South Carolina right now is the fastest growing state. We had about 1.8 million. Census Bureau says 341 million in the country. It's a much slower rate. We had an increase of 3.2 million the year prior. All four regions saw population growth, just at a slower rate. All but 5 states grew between that time frame. California, Hawaii, New Mexico, Vermont, West Virginia did not grow. 33 states and DC had positive natural change. Births outnumbered deaths. That's interesting. Every state and the DC area had lower net international migration. Florida, Texas, California, and New York had the highest levels of net international migration. And 31 states had positive net domestic migration. Okay. So there are your highlights from the U.S. Census Bureau. Another migration pattern to take a look at on where are the opportunities over the next 5, 10, 15 years. How about the next 5, 10 days on the 10-year Treasury? Oh boy, we're about to We've gotten pretty close to the doorstep here of 4.3 today. We're at 4.281, highest level we've seen in the last 5 days. Basically back to the highest level we've seen in the last 30 days. Highest level on the 10-year of the last 90 days. Good news is that spread is really holding us in on these lower rates. Yesterday's reading, despite an uptick in the 10-year, went to 6.17 on the daily Mortgage News Daily survey, up from 6.16 to end the week on Friday. So we're hanging tough on this 30-year fixed rate. The spread's really helpful, despite a 10-year that is moving up, okay? No changes there on expectations with the Fed. We kind of beat that to death yesterday on rate cuts. Tomorrow's BAM Pro Bowl, it's one of your last chances to get your spot. Noon Eastern, 9 a.m. Pacific. It's BAM Pro Bowl number 3. It's a Super Bowl of real estate knowledge. Value-packed, entertaining. We kick it off every year with a national anthem from a real estate professional, somebody just like you, except that they can sing. Okay. By the way, this should not be free, but it is. So join us. Neil Dingra, new rules for standing out this year. Algorithms change all the time. Neil's going to break it down. How to elevate agent status this year. Myself, Jared James, James Dwiggins. Sorry for the pun, James, but digging in to how to elevate agent status. Okay. Rapo, creating content through storytelling. I mean, if you see her on IG, AKA Not Your Daddy's Lender, has a knack for this. So really big, important conversations, moderated play-by-play with myself, and Eric Simon, the broke agent. Looking forward to Kyle's national anthem. This is going to be, we do 4 major virtual events a year. I can't imagine one like this one, what we have planned tomorrow, noon Eastern time, bamprobowl.com. We'll see you there. Until then, Real Word up on the channel later today. And I'll see you on Hot Sheet tomorrow, and I'll see you BAM Pro Bowl tomorrow. Until then, toodaloo. Have a great day.